Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome to our show Chris Naugle. Chris is an entrepreneur with high-level experience as a financial advisor managing over $30 million in assets. Using his expert knowledge in finance, he has successfully bought, renovated, and sold hundreds of properties, with his work being featured on HGTV. Hey there, Chris. How are you? Welcome to the show.
I'm doing great, and I'm excited to be here.
Yeah, I'm really excited too. I can't wait to hear about all of this private money stuff. It's going to be really, really fun. So why don't you start by just telling us your story?
Sure. I mean, the story starts when I was a kid. I grew up in a very lower middle class family. Dad was an alcoholic. Mom and dad got divorced, and mom had to raise me. It was that story you hear all the time. But that story's not the norm for everybody, and I realize that. But that's just how I grew up. But I was that kid that always wanted more. And I'll never forget, I always was willing to go out there and do what everybody else was unwilling to do. By 2004, that landed me to being a pro snowboarder. Now, I don't know if many of your listeners have ever been to Buffalo, but most people avoid this place like the plague. But it's not exactly the iconic place where you breed pro snowboarders. We have hills, not mountains. But by 2004, I'd accomplished that goal. And that's all I wanted, was to be a pro snowboarder. And I also, at that point, had co-founded a chain of snowboard shops called Fat Man Board Shops. And I actually started them when I was 17 years old. I started it as a clothing line in mom's basement, which is kind of a whole nother part to the story. My mom, who never had anything, as crazy as this sounds, she put her house up on the line, and it was the only asset she had in the world. So she put her house on the line so her crazy punk 17-year-old snowboard kid could chase his dream. And that's how Fat Man Board Shop was founded. But by 2004, even though I had become a pro snowboarder, even though I had this chain of 4 snowboard shops, everything in my life it seemed like a fairy tale, but I still wanted more. And I'll never forget, at that point in time, I was infatuated with the movie Wall Street. You remember the original Michael Douglas Wall Street movie? I remember that movie, and I'll never forget it. When I saw that movie, the first thing I thought is, I want that. And only thing I could think of is, to get that, I need to be a stockbroker. I need to be a financial advisor, which is really where that all began. Because in 2004, I started diving in and really studying and doing everything it took, and I became a financial advisor at right around that time. And as an advisor, I excelled really fast. Got all my licenses, got every single certification you could possibly get. If there was a cert, I went out in there and I got it. And because of that, I rose to be one of the top advisors in the firm I was at. And that continued on. And I was an advisor for a long time. And during that period of time, I also, by 2006, I had been seeing some of these flip shows on TV. So we'd be at the shop working, and we'd have, HGTV on, or A&E, and we'd see these flips. And a TV show, you see a flip getting done in 22 minutes. It's pretty entertaining. And I said, you know what? I can do that. So I had some money, from being an advisor, and, I decided to start flipping houses. And my first one was in 2006. It was a complete disaster, is the only word I can call it, but I got my feet wet. And I did that all the way up until 2008. Now, by 2008, this is kind of the pinnacle. I was crushing it. I was literally crushing it as an advisor. I had flipped a couple houses. I was a pro snowboarder at the peak of my career. By that point in time, by 2008, I had my retail stores. Everything was humming along with that. Then I got my next big idea. And this is one of those grandiose ideas, because I've always been a big thinker. And that idea was, I was sick of paying rent to my landlord, who kept raising my rent. 2 buildings down, this dilapidated paint store came up for sale. And I saw the sign, and I'm like, you know what? that could be my new home for my stores. But what I would do is I would convert it to a 3-unit strip mall. I'd have the tenants pay for my rent, because why should I pay rent when my tenants would pay it for me? I mean, that was my big idea. And I dove in. I borrowed money from a hard money lender. I call them Knuckles in my stories today. And there's a very important takeaway on why it was Knuckles. But you kind of heard when I said I did this, right? 2008. And in 2008,
Perfect timing.
perfect timing. They always say timing's everything, right? Yeah, because what I didn't see coming, and I didn't even see this coming as an advisor, which is a whole nother story that we'd have to talk about offline because we don't have time to get into that. But in 2008, the small thing called the Great Recession, well, that Great Recession hit me like a Mack truck, and it brought me to my knees. And it got so bad during that period of time that I was one payment away from being completely bankrupt. I literally didn't know how I was going to make it to the next day. And what happened is my girlfriend, she's now my wife, Larissa, she had just moved into my house. And I had to come home one night. And this is like when everything was crashing all around me. You know, it's when you think your life is going one way and then all of a sudden these things happen, and you know what? Then you're going the complete opposite direction. And I came home and I looked Larissa in the eye and I said, sweetie, I need your help. I need your help paying the mortgage. I need your help paying the utilities. And honey, you're not going to like this. I have to rent that bedroom out to this guy named Pete. And I know you don't know him, but I can't make it. And this is what I need. And at this point, I was kind of just threw it out there because I had no one else to ask. And I thought, you know what? This is a 50-50 shot, because she could just say, you know what? I'm just going to let myself out and good luck, buddy. But I think she kind of liked me, because she ended up marrying me and she ended up making it through that period of time with me. And those are exactly what we did. We actually rented out 2 bedrooms in my little house that I had back then. And that's how I made it through. And by 2009, Warren Buffett was my hero, my all-time hero. And Warren Buffett says 3 things, and I repeat these all the time: buy low, sell high, and don't lose money. Well, in 2009, I understood one of those 3 things. I understood buy low, and I also understood real estate was really cheap, because that's what the whole recession was about. And that's what brought me to my knees. And I was right in the middle of it. So heck, if everything's low, well, let's start buying. So that's what I did. 2009 to 2014, that's all I did. I bought dilapidated apartment buildings one at a time. And I borrowed money personally for each one of these. You know, I wasn't using commercial loans because I didn't know how money really worked. I thought I knew how money worked because I was an advisor. And I knew exactly what I was taught in all the teachings and all the classes and in all the certifications. I learned exactly what everybody else knows about money, the traditional way of thinking about money. Well, by 2014, I got up to having 36 units. I was back to making good money in the advisory firm because the markets had rebounded. By that point, I had sold off my stores in 2010. So Fat Man was sold, and I've even sold off my strip mall. But right at this point in time, I realized I was in trouble all over again. So you would think everything was going good, but what I didn't realize is when you borrow money in your personal name, the banks look at you and they say you don't fit in their little square box eventually. Well, I got up to 36 units, which I think was 6 properties. And at that point, I brought one more to the bank, and the bank said, you know what? You don't qualify because you don't fit in a little box called the debt to income ratio. And at that point, I said, okay, well, I can't buy this new 6 unit, but you know, I got all my other ones. And then they said, yeah, but you know, all those lines of credits that we gave you, we have to freeze all those, Mr. Naugle. You can't use those anymore. Now I had a bunch of properties unfinished. So at that point, you know, I'd gone from having money back in 2008, I was crushing it, to almost losing it all. Then I kind of had made it back, and here I was again. Now I was losing it all again. And I ended up literally getting so bad that I was living paycheck to paycheck, trying to make ends meet with all these properties and all my obligations. We had bought our dream house, me and Larissa, so that was a big expenditure. And it got so bad again that we had to sell off all 36 units, which who cares? They're just investment properties. But then I had to sell that dream house. And that's when I started thinking about really quitting. And I was like Rocky Balboa with the towel, like ready to just throw it in. And then I got in the mail a postcard. And this is kind of where everything started changing. And it changed because what I call a magic postcard. This postcard was nothing special. You've gotten them, and I bet you your listeners have gotten them. It said, come to this 3-day seminar to learn how to flip houses. And when I tell people that, they're always like, man, you're crazy. Why? What is wrong with you? But you know what was wrong with me is that at this point, I was so humbled by my failures that I had nothing to lose. But by going to this seminar, I got a free iPod shuffle. That's exactly why I went. I didn't have anything to lose. I had an iPod shuffle to gain. So off I went. And day one, nothing special, but by day two, everything changed. And it wasn't because I learned a whole bunch of new stuff. It was because I learned one new thing. And that one new thing was that breakthrough for me. And just like so many of your listeners and the people you're around, we don't need a ton of new things, right? We need one thing that will catapult us faster, smarter, and more efficiently. And that one new thing for me was I learned that with the successful real estate investors, and there was two of them, Mike and Greg were their names, what they were doing and how they were using money in real estate was the complete opposite of everything I'd ever been taught in my entire life about money and about how to use money in real estate. And at that point, I realized that they don't teach this stuff. This is that kind of knowledge you need to seek out and you need to dive in and chase, because it's never going to come to you and no one's ever going to teach it to you because they've got nothing to gain for teaching you. And when I learned that, I started questioning everything. Everything I'd ever learned started being questioned. And then I dove in. And at that point, I also learned that, everything I blame, sometimes in life when you got hard times, you blame everything else. I blamed the lack of money. I blamed the economy. I blamed everything I could possibly blame. I was in the blame game. But then at that point, I realized, it wasn't about the money. It wasn't about the economy. It was about the misinformation that I've been given my whole life, because these two guys, what they were doing was working and they were killing it. And it was everything that I'd never been taught. That's the moment when I decided to get off the hamster wheel, what I call the financial hamster. And that's when I learned how all this worked. And that was by how I learned all this is I swiped my credit card for $27,000. Now, I just told you where I was in 2014. I was broke. I was barely making it. And here I did, swiped my credit card. My wife pretty much killed me when I came home and told her, honey, I just bought us this thing, that thing that you didn't want to go to. Well, I just swiped my credit card for 27 grand because what we need is what these guys can teach us. And that swipe is what changed it all. And I also, when I swiped it, I wanted to throw up in my mouth. I mean, actually, I think it did. One of those ones that you got to re-swallow, because it was so overwhelming that I was broke. And here I was going $27,000 in debt without a hope in hell and ever paying that money back. But that's where the TV show comes in. See,
well, actually, I want to just point out some things really quickly. Chris, your story is amazing, and it really highlights some of these things that people go through or are afraid of going through. So what is the biggest reason people don't get started in real estate? It's fear, right?
Fear and money.
Yeah. They're fear that they don't know enough, that they're going to fail, that they're going to go bankrupt, that they're going to end up homeless. I mean, there's a lot of things that go on through our mind that are not necessarily rational, but are definitely there. And what's interesting is when someone comes on this show and they lived the nightmare. So you were one paycheck away or one payment away from being homeless. You had to sell your dream home. You were crushing it, and then you lost everything, and then you're crushing it, and then you lost everything. And this is the thing that I really want the ladies to know. Success is there for the taking, but failure is a part of success.
Oh, 100%.
And we learn through that failure. And yes, failure is scary. Chris can tell you, I'm looking at his face, and many of you are just listening to this. He gets choked up when he's talking about this. It was hard.
Yeah.
It sucked. He had to talk to the woman he loved and humble up and ask for help, right? He had to sell their dream home.
That almost cost their relationship.
That's right. And things happen that sometimes, we're afraid. What if they leave? I know I've had this with David. What if he leaves me? I've made this huge mistake, right? But the thing is that, and I've said this so many times, and I just want to say this again, don't give up on yourself. Real estate really is the single most consistent, proven way of building wealth in the United States. And it's safe in general as long as you do it the right way. And so we know real estate works. But if you get in it and you make some bad decisions, it's not going to kill you. It will make you stronger. And in the end, if you stick with it and you don't give up on yourself, you will see success. And even if we see failure, even if we see economic crashes, no matter what we're seeing out there, what's going on in our own mind is going to determine how successful we really are. And fortunately, we have control over our own mind, right? So that's a really important thing. And Chris, I love your story of kind of this roller coaster ride, because this is the thing that so many women fear. Now, I would never advise people to do that.
No,
It's
me
painful,
neither.
right? Like jump in, like feet first, like without any mentor, without any knowledge. Don't do that, right? But if you do your research and get started, you get a mentor who can help you sidestep a lot of those mistakes, right? And then you can see success. So I just really wanted to point that out, Chris, because I think as people are hearing this, we're all emotionally involved. Oh my gosh, I can't believe he went through that. But I just wanted to point out that this is what we fear. This is our worst case, right? And now Chris is here talking today about his successes. So thank you for that, Chris.
And you're so right with everything you just said. I mean, you could even take and go back into my story and pull out the rest of the fear. I mean, the fear of being a pro snowboarder and what that was like, you know, showing up places and having to hit a jump that you thought was bigger than anything you've ever hit. I mean, that fear that engulfed you. I mean, that was just part of life as a pro snowboarder. The fear of when my mom put her house on the line, even though that was an exciting time. As a 17-year-old turning 18, my mom's house was on my shoulders. And if I fell, I lost my mom's house. I mean, it's just been my whole life has been just facing fear. And don't think for a second it's ever been easy. And you know, it's just like that whole roller coaster ride you heard there. There's so many things in there where literally I just wanted to quit. I wanted to quit every time, but the only way to truly fail is to quit. And I wasn't willing to accept that, even when things got so bad. In 14, when me and Larissa, you know, she was my fiance, we split. And I don't ever even say this, but I just think your audience needs to hear this. We split when that house got sold. Things got so hard, and I didn't know if that would ever come back. I had to take a month and go to Thailand to clear this head because I just didn't know like how to get through to the next day. But it all came back together because I never gave up. And you know what? She never gave up on me either. And when we came back and we went to this training that we spent all this money for, and you know, she was at first really mad at me. She couldn't believe I did what I did. But then when she saw it and she met Greg and Mike and she met all the other mentors that we were being coached by, she realized that this is what we needed, because she realized that this is the stuff we were never, ever shown. And, you know, I'm just going to get right into the show because, you know, so many people want to know, you know, how does one go about getting an HGTV show? How do you get that? Because that's like the likeliness of getting struck by lightning. And a lot of people are misinformed on how you get a show. A lot of people think that, you know, that they see you on Instagram or Facebook or this, and they just call you up and, hey, we'd love to have you on HGTV. Oh, no. See, here's how it started for us. We were in a convention at this real estate training, you know, with our mentors, and Tarek and Christina got up on the stage and they did a little dog and pony talk, and it was great. And my wife and I looked at each other, and, you know, when I said to her, I said, sweetie, if we're ever going to get on that stage, we got to have our own show. So instead of going out and trying to find somebody to produce the show, I went back and I hired my friend Kyle, and he started going to one of the flips we were doing, and he started filming us. And I got this crazy idea as a snowboarder that we should do a show that mimics Jackass and Flip or Flop and bring it together. And that's where the first rendition of the show came up, which was FlipOut. And kind of how it started is we just started filming, and we were having so much fun doing it. And it brought me and Larissa closer. We brought one of my ex-pro snowboarders in. His name was Blair. And that whole experience, that bonding experience of actually working toward this pie in the sky thing, which, yeah, it's scary. You know, yeah, it's like this may never happen. But the thought that if you work toward it and you keep that idea strong in your mind, it can happen. And you know what happened? It did happen. We sent that video out to all the networks, and we got turned down by every one of them the first time. And then our producer that took us on dropped us because they couldn't get it placed. And we should have just quit there, but we're like, nope, we got something. We went to the next producer, and that producer took my little crazy pie in the sky idea and he made it into their little box. And he said, this is what HGTV is looking for. You guys are this close. We just need to, you know, squish it together. And we filmed it a whole nother flip. And that flip is the one that got us on HGTV. And it didn't happen overnight. You got to understand, 2014 is when we started that dream of getting a show on HGTV. We didn't air until 2018. Think about that, folks. Like, sometimes your dreams are not going to happen overnight. There is no easy button in life. It is a marathon. And if you want something so bad that you can taste it and so bad that you will never stop, you'll get it. Because just like, Napoleon Hill says, if you dream it and you believe it, you can achieve it. Well, that's exactly what got us the show, never giving up. And our show aired in 18, HGTV's Risky Builders. You can look it up. I mean, it was a wild and an exciting time. But that same thing, when the show aired and we aired 6 times, we didn't move on to the next season. So again, like, you think you got it. Your ratings are there. You're the number 2 show out of Greenlight, and you think you got it. And then all of a sudden, one thing happens. And that one thing that happened for us was Discover bought HGTV right when our show was airing. And they decided to freeze all new shows. So that door that we thought was going to open, that was going to pave the way for the rest of our life, slammed in our face.
So, and and yet you still had that experience, right? And, and another thing that Chris said that I just really want to highlight, his dream took 4 years. So we are so conditioned to think, to have sort of short-term vision, and immediate gratification mentality is very common now. So there's so many people out there promising us, you can make $1 million in 2 years. You just have to work 10 hours a week, blah, 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 this, for the next 18 months and blah, blah, right? And here's the truth.
I wish they could see my face now.
I know. And the truth is that I'm not going to say bad things about anybody that's making promises, because I don't know. But what I do know is an assured way of success is to have a long-term vision, especially in real estate. Like Chris did flips. That's sort of more of a short-term thing, right? I've done a couple of flips. It's not my favorite thing to do because the pressure is so high. But you want to have a long-term vision. So whether you're buying, you're flipping, first of all, if you're flipping, have deep pockets enough that you can recover from any mistakes, because with flipping, you have to be right on target, right?
Yeah, you're 257 flips to date, actually be 258 soon. And
right.
I can assure you, you better hope you've got a good plan for how cash flow is happening.
That's right. And in the beginning, mistakes happen, and that costs money and time. Mm-hmm. And so you need to make sure that you've got the backing to do that if you want to do flips. But regardless of whatever you're doing, whether it's flips or wholesaling or buy and hold, which is what I do, have a long-term vision. Real estate is not a get-rich-quick scam or idea. It is a long-term business. And so even though his TV show, we're talking about that, and it took 4 years, whatever, understand that real estate is that way too, that you want to stick with the dream long-term, because that's how it's actually going to pay off.
Absolutely correct. And the other thing too that you said in there that I just want to clarify that's so vitally important is, if you're getting into real estate, I don't care if you're going to wholesale, I don't care if you're going to flip, I don't care if you're going to, do burrs and buy and holds. You really should have a system and a strategy. And my system and strategy is very simple. Each and every single property I have goes through, I call it 4, but we'll just focus on 3, a 3-step strategy. Number 1, every deal we get, first we try to assign that deal, because the quick dollar is always the best dollar. Number 2, if we can't assign it, we don't freak out, we don't worry, because you know what we figured out? We figured out how money really works. That's it. It's what I've written a book about. It's what I teach. It's what I talk about. Money and how money works. So we take the deal down, and then what we do is we look at, can we wholesale this deal? Can we do a quick sale without doing much work or any work at all? If we can't, if we flip the deal, that's strategy number 2.5, as I like to call it, because if we can't wholesale it, then we'll look at flipping it. If we flip, or we're looking at that strategy, we have to be able to make 20% profit. Now, if we're not going to make 20% profit, it moves on to step number 3, or strategy 3, which is a burr. What we're going to do is we're going to renovate it like a flip. We're going to basically get it ready. We're going to rent it, and then we're going to take it to the bank and refinance it. And then we're just going to keep it as a long-term rental, because once you own the asset and you control the asset, it's now providing cash flow, it's appreciating. And now what we've even been doing is taking a lot of our rentals, packaging them together in really nice rental portfolios, and selling them off to areas like California, Toronto, New York City, where they can't touch rate of return like what we're getting here. And that's what we've been doing. Because we have that system, We never have to worry about cash flow because there's always a secondary strategy. And I think that just goes right into what you were saying. So there's not really one or the other that's better. Just make sure you have multiple exit strategies in your strategy.
Thank you so much for saying that, Chris. That is my big thing on how I have avoided my own disasters in my life in real estate is always having several exit strategies. And every business partner I go into business with, they have to understand that I'm not married to one particular exit strategy. I have my preference, but if that one doesn't work, we are going to number two. In other words, if we're trying to sell a flip or a construction project and the market has plummeted and we can't sell it, I'm not going to chase the market down. I'm not going to do that. We are going to rent it, right? So understanding that you have many options with exiting a project is really, really important. You don't want to get married to a particular idea, and you don't want to get so bullheaded about it that you will make mistakes like chasing the market down. Instead of chasing the market down, chase rents up. You can do the opposite, and succeed. So I love that. And Chris, nobody else talks about this is the multiple exit strategy. So thank you so much for that.
Because when I was doing, like I said, we did 257 flips, and, you might look at that and be like, wow, you cried. Well, we made a lot of mistakes in the early years. All we did was flip. And I can tell you, there were times where literally I couldn't even buy groceries because I had so much money out there. I didn't have cash flow. So we started getting smart. And what we started doing is getting a rental, and that rental cash flow, we'd roll it in. We created a spreadsheet. We had X amount of cash flow coming in, and we wanted that cash flow to support the carry cost on the flips. And it didn't happen overnight, but we started figuring out, wait a second, if we can build a rental portfolio that cash flows, we can use that cash flow to determine how many flips we can do at one time, because the cash flow carries the cost of the flip business. And then you make the big profits on the flips, but sometimes you got to wait for that. And then we started saying, well, if the house doesn't sell and we don't make 20, no big deal. Let's just rent it and we'll move it into the rental portfolio because, hey, if it didn't sell now, it might sell next year, or maybe down the line, we'll just keep cash flowing it. So you see, we figured this out through mistakes, folks. Your audience, all these ladies like trying to get into this business. If you just take this knowledge and you apply this in your business, you will not go through these roller coasters that I had to. You won't have to look fear in the face like I had to so many times and say, how am I going to get to the next day? Because you've learned from someone else's mistakes. And although failure is a necessary part of success, you can minimize the amount of failures by learning from other people's failures and then applying what not to do in your practice.
Right. I love that, which is why a mentor is so important.
Oh, it's vital.
Yeah. Could you tell us a little bit about how you started financing things? I know you started using private money rather than the banks. Could you tell us a little bit more about that?
Absolutely. It all came when I learned that the people that were crushing it in the business, I always thought it was because they had millions of dollars of their own money. But I learned that they didn't. They just mimicked what the banks did. They used other people's money. And what the biggest thing I started doing, and I was very good at this because I was an advisor, is I started going out and finding all these people that I thought had money, whether it was in an IRA, whether it was hidden equity in their home, whether it was just money that they had set aside in investments that maybe they weren't comfortable with the risks. I found all these different sources of money. And the biggest source of money I found, to be honest, and this is going to blow you guys away, permanent life insurance. You know how much money is sitting in permanent whole life and universal life policies, and these people don't even know that they can access their cash value? So I started going to these people and I started solving their problems. And this is a massive takeaway. One thing I got super good at is never asking for money. I never went to somebody and asked them for money. I went to somebody that I knew had money and I said, I learned what their problem was. And sometimes their problem was they didn't like making their car payment. So what I would do is I would teach them and I would say to them, what if I could show you how to have your house pay for your car? You see, their problem is their car payment. The thing I know is they've got equity in their house. So instead of their house being a liability, I taught them how to turn their liabilities into assets by just taking and using that hidden equity that was sitting in their house. And then that interest that I paid them on a monthly basis, the mailbox money, that paid for their car payment. Then I started learning that people really, their problem wasn't wanting to become a multimillionaire. Their problem was they wanted to take one more family vacation. Maybe they wanted to take their whole family to Disney World on them and pay for the whole thing. That, to someone, that's a major problem in their life. To us, You know how easy it is for a real estate investor to solve that person's problem? Just show them how to take their IRA, their 401k money, their hidden equity, their money sitting in their life insurance, and how to then take that income from those vehicles that are not doing anything for them in terms of an income, and show how that income will take that make them have that vacation. Do you see what I'm saying? The number one thing to raising private money is not asking for money, is not knowing a bunch of people with money. It's going out there and finding the people you know, the people that you like, the people that trust you, and teach them how to solve their problems. And their problems are so stinking easy to solve.
So for you, it was actually pretty easy because you were a financial advisor, so you had access to this information. But the layman, for me, for instance, me, I would never have that information.
Oh, you do though. You do. How many people do you know that have employer-sponsored retirement plans, 401ks, 403bs, 457s? Absolutely. Every person you know that's working in a regular W-2 job probably is putting money into a retirement plan. They've been taught to do that their whole life. So they've got this money sitting in their retirement plans, but you know what their mindset tells them? I can't use that money. I would have to pay tax and penalties to take that money out. That's what they think. But they don't know that they can take a loan from that 401k. And when they take a loan from that 401k, you being the borrower or the real estate investor can pay that loan back for them and put some extra money in their pocket. Because if their loan costs them 5% and that interest that they're paying on the loan actually goes back into their account, but that's a cost to them, why don't you just pay them 10? Then they're making a spread of 5% on that money. Everybody's got one of these things. A lot of people have old 401ks moved into IRAs. Show them how to take those IRAs and move them to a self-directed IRA. You don't even need to be the expert. Just say, I know a person that could basically help you do this. You see, everybody wants to think that, I'm different because I was an advisor. Maybe it was a little easier because I knew how to identify these things, but everybody knows somebody that has money. But most people will tell you that they don't have any money because they don't know how money works. If you just get a little bit of knowledge on how money works, and you learn how to position your opportunity, which is your real estate deal, your opportunity, you can be positioned to solve their problem. Then all of a sudden you start figuring out that the people that you don't think have any money are the biggest ones you can help and the biggest ones that can give you money for your deals. And so it's just a misconception of where money actually lies and how people can use that money.
That was fascinating. Thank
Sorry,
you.
I kind of went off I went in a rabbit hole, but
I can tell you love this. And you know what? I really want to go back. My brain, ladies, I don't know if this happens for you, but someone starts talking about something and then something grabs your attention and you don't hear anything else, right? This happened to me while you were talking, Chris, so I'm just going to backtrack a little bit. But you talked about they've got their 401k, you can take a loan. Say you get 5%, and then you, Chris, are going to pay them 10%, right? Yep. So, ladies, the only reason I am focusing on this is just to give you an idea on the paradigm shift that Chris can create for you. There's one example, and based on what he just said, there's probably many opportunities based on what you've got. But here's the paradigm shift that just happened for me. You take out a loan from your 401k at 5%. I don't know if you caught this, but do you know that 5% is getting paid back to you? So you're paying interest back to yourself. So you're making 5%. Then he's giving you 10%, right? So you're actually, a lot of people would look at this and say, I'm getting a loan at 5% and I'm getting paid 10%. This is arbitrage. So I'm only making 5%, right? How much are they making?
More than 5%, because you're paying them 10, and that 5 they're paying back to their 401k is their money. They're paying themselves back with interest. So ideally, 15%. What they're doing is they're doing the same freaking thing the bank does. You are literally mimicking what the bank does every single day because you learned one new thing that you can change. That's it, because that's everything I teach people is only changing one thing in your life. That is it. And it's applying basic banking principles, the simplest things that are around for hundreds of years, to your everyday life, and it will change your life, completely transform your life if you learn that one new thing.
And there are many of those one new things, right, that we can learn. And once we focus on one and we start to utilize that, we create a plan like you're talking about. Now we have a business.
Think about the home equity line of credits, right? It doesn't cost anyone anything to get a home equity line of credit. Most banks will just dish them things out and they don't even charge for the appraisal. And it costs nothing to use or to get a home equity line of credit if you're not using that money. So now you got this home equity line, and that home equity line just taps into the equity in your house. And that equity in your house, like people get so excited about having equity in their house, but why? What is your equity in your house doing to change your life? Nothing. You know what your equity in your house is doing? It's just, I want you to visualize this. Picture you come home from work, and on your couch is your money sitting there. And your money is holding the soda from your fridge, the Lay's potato chips from your cupboard, and there's crumbs and everything all around your couch. And your money is sitting there watching TV, just kicked back. You worked a hard day, and your money looks at you and says, did you have a hard day at work? That's what your money's doing every day. It's sitting on your couch being lazy while you're off hustling, thinking, because you've been taught to work hard, to go out there and work hard, work long, and you'll get ahead. Your money needs to work hard. And the best thing about your money is you can be a slave driver. You can make your money work so hard, and it will never ask for a break. It will never ask for a vacation. It will never even get mad at you. But you have to teach it and send it to work. Your money is just sitting there being lazy. Teach your money how to go to work. Like my mom. Remember my mom, we told that example where she put her house on the line? Well, after she did that, we learned something. You see, after I paid off that store's loan, what we started doing is mom had this line of credit. We started using mom's line of credit to use that to buy real estate. And in what I did, my mom's line of credit was 5%, and I would pay my mom like, I don't know, usually 8 to 10% on the loan. So I'd take a loan and I would pay mom back. That amount that I paid my mom above and beyond her payment to her home equity line of credit was enough to pay for her car. So like that's where I came up with that whole idea of have your house pay for your car. That's what people want. People want their car payment paid for by their house. They just don't know how. And the answer is so freaking simple. Every one of you listening to this have the answer to their problem. And that answer is in the form of a real estate opportunity. Don't ask for money, solve problems.
I love that.
Sorry, like I said, I just love this stuff so much.
Yeah, no, and I've got a million things that I feel like I could add, and we're already out of time. So, so we're going to actually have extra after this, and we'll do a deeper dive on some of this stuff. So ladies, if you're subscribed to extra, you're going to get a lot more. If you're not subscribed to extra, do it because you're going to want a lot more. So we're going to talk about more of this stuff then. But before we close out this portion of the show, Chris, could you tell people how they can get in touch with you?
Yeah, the best way to get in touch with me is my website. It's Chris Naugle, Naugle.com. They can go on there, and that's the best way. They can also check me out. A lot of people love social media. I am all over Instagram. It's Chris_Naugle, and Facebook, Chris Naugle on Facebook. You can't not find me, and just I answer every single direct message individually.
Great. And I know that you wanted to give my listeners a free gift, which is the ebook of your best-selling book, which is Private Money Guide Real Estate Edition. So he's showing it to you for those of you who are watching or listening. But anyway, so he's going to be giving you that free ebook, and I will have a link in the show notes. And Chris also wanted to make another really generous offer. Could you talk a little bit about the membership offer you wanted to make to my audience?
I did, because, we're talking about money, and the biggest thing, a lot of times I can teach people where all the money is, and, they still just don't want to go look for it. So what I've created is a community of lenders and borrowers. Picture eHarmony. Okay, the dating site. Well, I've created that for lenders and borrowers. It's a community you can come into where all the lenders in there communicate with all the borrowers, and the borrowers can submit their deals through a standard operating procedure. We do all the work for you. You just fill in the blanks and your deal goes on. And literally you can have all the lenders looking at your deal, and they will do that. And it's called the Money School Community. And what I wanted to do is basically just make a special offer and give it to everybody in your community at a much reduced, or a very, very reduced price over what we normally charge. And you can test it out. It's just a monthly subscription. You can try it. If it didn't work, you just stop the subscription. No big deal. But it is literally provided funding for I don't even know how many at this point, because I don't keep track of all the deals. But yeah, that's what I wanted to do.
Oh, that's so great. So ladies, the URL, and this will be in the show notes, just so you know, but I wanted to just say it's chrisnaugle.teachable.com. And then you're going to go look at the membership. It'll show you the regular price, but then when you get an opportunity to put in the coupon code, do 50 off, and OFF are all capitalized. So 50 off, and you'll get $50 off of the monthly membership. And like he said, it's month to month. So you can try it for 1 month at this very reduced rate, and continue at that rate if it seems to be something that is going to work for you. So that's really, really generous. And it's an ongoing gift. It's not like $50 off the first month. It's an ongoing monthly gift.
Right.
So that was so generous. Thank you, Chris.
You're welcome.
All righty. So are you ready for our 3 rapid fire questions?
I'm always ready.
Awesome. So give us one super tip on getting started investing in real estate.
The super tip to getting started is actually easy. It's just get started and find one person that is doing what you want to do and latch onto them and learn from them. That would be my super tip to getting started. Stop trying to think you need to know everything and just take that leap and start.
I love that. And then what is one strategy on being successful in real estate investing?
One strategy on being successful in real estate investing is come up with a strategy before you get started. So lay out and map out where you want to be, and then basically come up with the plan to get there. If you want to have 5 properties, we'll come up with that plan of how many offers do you have to make versus how many houses you have to get, and just write the plan down. Don't dive in without a plan. Just do the plan first.
Love that. And then what would you say is one daily strategy or daily practice that you use that contributes to your personal success?
It's easy. Every morning, the very first thing I do when I wake up is I get down on my knees and I thank God for what I have for today.
I love that. A nice gratitude practice. I love that. Thank you. Chris, this has been really amazing. Thank you so much for everything you've offered in this portion of the show.
You're welcome. It's been an honor.
Great, thanks. And ladies, thank you so much for joining Chris and I. Like I said, we are going to be talking about more of this stuff in extra. The question that I am going to be asking Chris is, how do you build wealth through debts and expenses? How do you come out ahead? That's really juicy. And we'll probably be doing some more deep dive on the private money piece also. So stay tuned. If you are already subscribed to Extra, if you're not subscribed but would like to be, I know this sounds a little bit confusing, but here's the thing. You just go to realestateinvestingforwomenextra.com. That's realestateinvestingforwomenextra.com. You sign up for the subscription. You get the first 7 days for free, so you can test it out. You sign up for the subscription after that. It's a monthly subscription, super cheap. It's like $5 a month. And then you can get your extra episodes on the same device that you're watching your other episodes. So if you are on Apple Podcasts, you'll be able to see it on Apple Podcasts. If you're on Podbean or anything else, you'll be able to see it on the device that you're using right now. So you don't have to have another subscription to any other devices or apps. Okay, so that's how you do it. I just want to explain that. I know that was a little bit long-winded, but I get so many questions on how do you do this. So it's just realestateinvestingforwomenextra.com, and then it's self-explanatory from there. If you're leaving us right now, thank you so much for joining Chris and I on this portion of the show. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you next time. Bye. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.